I have no idea. Good evening, everyone. I want to know if you guys can hear me, so you let me know. You could just I think you can like type. So let me know if you can hear me, please. Can you guys hear me, please? Okay, Michael, can you hear me? All right. So since you guys can hear me, so let me just proceed to business of the day. So instead of we're doing a weekly market review on E-mini Nasdaq, the S&P 500, the and also on BTC as well. And if time permits me, we may also look into gold. But I actually don't trade gold. That's the XAU. Well, if time permits, this is going to be just a 1 hour session. So so if you're just joining, if this is actually your first time being live with me, my name is Ifeanyi. That's couple of trades, and most likely be streaming my trades on Discord every single day. That's every single day till let's say to the end of the year. Like continuously, I'll keep streaming every single day because most persons actually be looking for this particular moment where they can actually like watch me trade live, take execution, teach, explain, as well to understand why I'm actually entering a particular position, my ideas behind, my reasoning, my ideas behind a particular position I'm about to take, why I believe price is going to get to this level and stuff like that. Also share entries as well too, because we all know the Nasdaq is actually a very fast market, so it's not and it's something I trade within the using the 1 minute time frame chart. So it's not something you can just have the time, luxury of time to want to start sharing signals, start typing out, enter at this particular point, with your stop loss at this point, because it's something you need to just know how to do yourself, how to be able to trade yourself. So I think with the live session, you can be able to watch me do it with time, and it's something that has been done repeatedly. You get to understand, you get to even learn faster from there. You get to learn idea the how to think, how to navigate this particular this market, especially the indices, which is what I'm very good at. So you could actually just go through my profile on X to find a way to be part of that. So moving on to the business of the day, let's start with BTC. Uh, okay, let's just move to the actual market here, which is the E-mini Nasdaq. This is the E-mini Nasdaq. And okay, first I'll start my analysis with starting with the monthly time frame charts. So let me move all the lipsticks here. I believe everybody can hear me. Please, if you can't hear me, you can just uh, type it out so I know that you can hear me, please. Okay, let me share this link again so persons can join. Hold on, please. Right. So I'll be starting the analysis from the monthly time frame chart, which is on imminent Nasdaq. So on the monthly time frame charts, you can see we have mm, on the monthly time frame charts. You can see uh, we we have we have this sell side liquidity here, which is the 3rd of November's low, and we also have the February 2nd. And also, what else again can you find? And also, what else again can you find? You see the monthly volume imbalance, which you have here. This is a monthly volume imbalance, which is uh, an inefficiency where price is most likely could come down to fill up this level here. So this is a monthly volume imbalance. We have the November uh, Monday 3rd of November's low, and we also have February's 2nd of February low. So these are what sell side liquidity here. We have sell side liquidity here. We also have this what monthly volume imbalance. Yeah. So if I should remove, let's say I remove this. So if I should highlight this monthly volume imbalance here, using this indicator, we have so I'm just going straight to the point. I don't have to start explaining too much details. Unless I would have started using the uh, dollar index, start my analysis with dollar index, but I'm just going straight to the point. So we have this monthly volume imbalance. We have the sell side, November sell side liquidity. We have February's low as well too. So these two going forward. So if I should go to as well as the weekly time frame charts, as well as the weekly time frame charts, what else again can you find? What can we find here? Uh, on the weekly time frame charts, we have this was for February. If you look at the weekly time frame chart now, you tend to see we have a form of what a volume imbalance formed here, right? You can see this particular candles. Look at how they work wicked through here and also wicked through here. So we have this area as well where there was no trading in between here. So there's a volume imbalance here, which I feel would need some filling in the future. Which most likely to have to this weekly the weekly volume imbalance. I feel would likely to be filled out. So I'll be marking out the weekly volume imbalance, which is what I'll be working with from this week moving forward. From this week moving forward, please. Um, So the weekly volume imbalance here, which is what I'll be working with moving forward. So we have uh, this here. So I'll be shading it with this color here. So this is the weekly volume imbalance here. So I want to see how they tend to trade they tend to use this shaded area here to take out this level here, or want to see how we tend to work with this inside of this weekly volume imbalance. So first of all, what we're paying attention to is how the okay, watch this. What is this? From the weekly volume imbalance, if you toggle through this settlement price at the right hand here, you will see the difference, right? If it's not clicked on, that's it. If you don't actually press it, you won't be able to see or notice that volume imbalance there, right? But if you click on it, toggle through, you tend to see we have this particular gap here, so which is what I'm using. So that's why I actually like marked it out. So whenever you're doing your analysis from the higher time frame chart, you need to make sure you that's from the daily as well as daily, weekly, or monthly. You need to make sure you toggle through the settlement price to tend to see if there are some gaps, or there's some inefficiency, or there's some gap that are not that are not marked out. So you tend to help you make sure that you have your eyes covered on every single area. You're not missing anything out. So if you look at this now, if I toggle through, you see you'll not be able to find that particular gap there. That's the SCT, that's the assessment price. So if I click on this again, so you can see the difference, right? I'm not sure this actually you could get this on the E-mini, the US 100. I actually don't know. So you can try check that yourself. So looking working with this is what I'll be working with this particular gap here. So I want to see how, if you're going to be bullish, I want to see how they're going to respect this weekly volume balance, and if you're going to work inside of this level, then push price downwards. So something like this. What I mean, something like this. If they're actually going to work price, depending on how the new week opening gap, or the this particular week's candle opens, I think we still have like a few hours towards that. Let's say 1, 2, 3. And also, please note we are now on daily and daylight saving. So the New York time zone has now shifted from UTC -4 to UTC from UTC -5 to UTC -4. So what that means is that since the 9:30 initially, the 9:30 a.m. Eastern time starts from 3:30 Nigerian time. So now it is now adjusted back to 2:30 p.m. Eastern time. So no longer 3:30 Eastern time. Please take note of that. You can see here now we are now using what UTC -4, no longer UTC -5. Please. So the 9:30 p.m. 9:30 a.m. candle EST now in Nigeria time, that's in now local time, is now 2:30. Yeah, it is now 2:30, no longer 3:30. So it's now 2:30. As our streaming now, our streaming time is going to start from 2 o'clock Nigerian time. So it's going to start from 2 o'clock Nigerian time, no longer 3 p.m. From 2 p.m. Nigerian time to 4. Okay, so from 2 to 4 or 4:30. So like I said, making use of this weekly volume imbalance. So I like to see how they tend to open price in the next few hours from now, how they tend to open price from this particular level here. But it actually makes sense if they tend to like open higher, but I actually don't have the skill set to be able to determine where the weekly candle, or where the weekly opening gap is going to form. I actually don't have the skill set to predetermine that. So I have to just wait until, let's say, a few hours from now. That's in the next 3 hours from now. Then that's when I'm going to have the opening candle for the new week. So I don't know how the gap is going to be. If it's going to be large, it's going to be low. If it's going to be a small gap, if it's going to form lower, if it's going to form higher. So from there, we start deducing information moving forward. So I highlighted this volume imbalance here. I highlighted this weekly volume imbalance. So this is a weekly volume IMB, weekly volume imbalance. So weekly volume imbalance, pay attention to this. So what else again can you see? We have this sell side liquidity here. This is the February 2nd, February 2nd sell side liquidity with this particular low for November. These are just previous monthly lows here. So previous monthly lows. Yeah, so if I should go down to as low as the daily time frame chart, so we have this. So I'm talking through to see if I can notice any gap that might not be under, like, let's say my radar. So actually I can't find anything here. So still kind of making sense. So we have the February 2nd low. We have November 21st low as well. So we have this outside liquidity and this outside liquidity here. So and also we also have this previous daily low as well too, which is this man here. Previous daily low of March Tuesday. That's last week Tuesday's low. Yeah. So I'll be marking out this level here. So uh, I'll come back to this. So uh, let's say going to the 4 hour time frame charts. Let's see if I can find anything. So the whole of last week, that was NFP, was just kind of like a little kind of choppy, but in the sense that it was kind of like choppy, or they kind of like it was more of consolidation. There were still opportunities where we could actually be able to like find setups, but it was not really smooth. Like on Thursday, there was a setup that I found on Thursday, but I was not trading. I didn't trade that particular Thursday because I actually had to avoid Thursday and Friday, which was the NFP. I actually had to like avoid Thursday and Friday. So I don't know if some persons noticed it, but let me just show it to you guys quickly. We have Thursday. Yeah, this is it here. I don't know if I can use the replay button here. Actually, I'm not scared of using the replay button. So on Thursday last week, we had the 9:30. I told you, I already made mention of this, that the best setup or the best time to get a good trade forms after 9:30 is that always after 9:30. So if you look at Thursday, we have where is the 9:30? This is 8:50 candle, 9 this is 9:20, 9:15, 9:30. This is 9:30 candle. So I'm using this man now to indicate to demarcate them. So this is what the 9:30 candle here. So look at the 5 minute time frame chart here. So before they were what during the London session, they were kind of like engineering price higher. We have this buy side liquidity, we have this buy side liquidity, we also have sell side liquidity here, we have this swing, we have this particular low. So look at this low from here to here. If I highlight uh here to this point here, so this particular layer, so that's moving into the 9:30. We have this buy side liquidity up above here, and this also liquidity here resting below. So moving into the 9:30, you can see what price did. And also after this sell side liquidity here, we also have this buy side liquidity here. We also have another buy side liquidity, which is this particular one here at 720, from that 720. You guys can see that, right? Okay, let me go with this. Please, if you have any question, if you're watching and you have any question, if you just type it out, I'll make sure to address that. So So if you have any question, you could make sure to just type that. So the Thursday, because I told you guys that you should always make sure you always like tend to like um treat price more like as a class of, so you tend to like get understand it very well. I tend to like familiarize yourself with it, with this particular price action. So let's say there's a particular day which you actually took a trade and you didn't actually get a clear setup, or you, yeah, or you, let's say you got a setup and you just stopped out. You should make sure you go back to that particular trade again. That's afterwards, tend to treat it like a correction, and then to find where you actually got it wrong, or what you didn't, you could not find, or you didn't see clearly, and then to just address it. Then you find wherever you're unable to see at that particular point in time, and then to just, okay, this was what I did wrong, this is what I did wrong, next time this is what I'm going to do right, next time. You just tend to like make amends and stuff like that. If you're someone who tends to like journal, you tend to just write it down. Okay, maybe stop loss too fast, I move my stop loss too early, next time I don't move my stop loss again, or I didn't enter at the right time, or I didn't use this particular time. You tend to just journal your mistakes and just treat it as classwork. You do your classwork and do classwork and corrections. So you get, so which one I'm trying to show you guys this. So you have this buy side liquidity here. We also have this one here on Thursday. For those, I don't know if anyone actually saw this. We also have this buy side liquidity here. We also have this buy side liquidity here. We have this and this. Yeah, buy side liquidity here and buy side liquidity here. We have this sell side liquidity here. So when price opened, price kept pushing lower on that Thursday towards the New York session. Kept kept coming lower, then took out what this sell side liquidity here. It took out what this sell side, sell side liquidity. If I was actually in this particular trade, I would have spot this out and it would have been a good trade for me. But I saw it, but the fact that I saw it live, I saw it playing out live, but the fact that I already told myself that I was not going to trade that particular day, because I actually didn't want to take that trade. And if it doesn't go my way, then I'll start saying, okay, I already told myself that I was not going to trade for that during that NFP, during those NFP days. Not as if you can't find setup during those NFP days, uh, or NFP events. You can actually find setup. I've done it before. I've traded during NFP days or NFP weeks, gotten good setup. But most of the times, price tends to just move anyhow. Uh, the algorithm just tends to just book price anyhow. So sometimes it's always just best to just kind of like stay still or just avoid the market, or you take read, or you just switch to a paper account or a demo account instead of trading live. I do that sometimes. So whenever I see that, okay, this particular setting or this particular environment is not something, is not really cool for me, I tend to just save my account. I tend to just save my account, so I actually don't tend to like risk or expose myself to an environment which I know I'm not really cool with, or it's not looking friendly. So you could just like save your. It's always right. You just get to like save your life accounts or your funded accounts, and you could just switch them, or you just take read, or you just watch and just study. You get, and just study it. Get, and if it actually do what you actually intended that it was going to run for, it's going to reach for, fine, you still be cool with it. It's all still form of learning. So we have this buy side and we also have this buy side. So what the price did? Well, price came down to take out what this sell side liquidity here using the 915 candle. Took out what this sell side liquidity here. We had this sell side liquidity sweep here. Like I've always said, whenever you're anticipating for a bullish framework, a bullish trade idea, a bullish setup, a bullish target, the price should reach for a bullish target. You should. It's always best you tend to anticipate for a sell side liquidity rate, or a form of sell side, or a form of read at the opposite side or at the opposite direction. So looking at this now, we could see this sell side liquidity here that was formed on 5th during the beginning of the London session. Yeah, this London low was cleared out here inside of the New York. So we have this previous session low that was swept out. So they took out this London session low for that Thursday. Then what they expanded using the 930 candle. This is the 930 candle. This particular one is 930 candle. So if I should remove this, we have this particular candle, and you can see this swing before they took out this low, you could see what which swing can you observe? You could see this bullish swing here, this man here. So that is your swing. That is your MSS. That is your market structure shift, which you need to see. So this is the swing here. This is the this particular swing here was the last one they made before taking out that low. So after they taking out this low, they what did an expansion. You can see this expansion higher. After this expansion higher, you should what anticipate for what a retracement back into what into that gap, or use what this man here as a what as a form of what your breaker block. So this is what a breaker block model. Yeah, this is exactly a breaker block model. For those that actually don't know this, this is what actually formed here. I wish I actually traded this, but I actually just saw it live, but I didn't trade at this, but because I know I will see tend to like get more in the future. We still have this week, and there are still going to be favorable setups this particular week. So it's not running away, and it's not going to end anytime soon. So we have this, yeah, this is a breaker block model, and also we have after its expansion here, we also have what a fair valuation gap. You get a fair valuation gap. So you can look at this. You can either use the fair valuation gap or you use what breaker block. So because most times it might not get to the block and it might use the what use the use the fair valuation gap. Or most times you use the breaker block. That's this is the block here. So this is a particular trading model. This is an entry model that is very efficient. It's the win rate for this particular is up to as 80%, 80 to 90%. Most of the time it delivers. So this is why I trade confidently. Whenever I find these setups during the London session, during the New York session, I tend to like break the bank. What I mean by breaking the bank is I tend to risk more on this particular kind of setup because it's something I'm very much confident in. And if it stops me out, fine, I'm still cool. But I think like this is one particular model I don't tend to joke with. I don't tend to joke with this particular model here. So I watched it play out live. I didn't share this because I just said I was not going to trade that Thursday. Actually just watch it play out on my phone. Just watching it. So you could look at this now. This is what the breaker block. This is the BB. You indicate it as what the BB, a breaker block model. So this you can see our price traded into the fair valuation gap. This is the fair valuation gap. This low to this high is the what is the gap. We trade into it once first. So the second gap as well. So using what the 9:45 to 10 o'clock, trade into what into the breaker block. So that would have acted as a what as your entry. Acted as a what as your entry, depending if you want to use breaker block as your entry or you just want to just use anywhere inside the fair value gap, it's still your choice. So what's important is where you place your what your stop loss. So I could use as here since the gap is very wide, I would have used it as my what as my stop loss. I would have used it as my stop loss, and what would I be targeting? I'll be targeting what this buy side liquidity and this buy side liquidity. Yeah, so buy side liquidity here, buy side liquidity here. So this was a very smooth trade setup that actually formed on Thursday. I don't know how many persons saw this or took this trade. So this is what first this will be. I'll actually be taking a partial profit here and the second profit at this particular point here. Okay, so this was a perfect trade idea. You can see from this entry here, stop loss here, to this target here, what was it giving you? 3 to 1, 3 to 1 risk reward ratio. I told you guys the most reasonable risk reward ratio you should always aim for if you have a good setup is what 3 to 1. Once a 3 to 1, just be done. And if you have extra position, you could just make sure you've taken most of those positions off at 3 to 1. Then you just allow the little one, which if you decide to, you could leave it for a runner if it's going to provide it to you, or you could just make sure it's just 3 to 1. Anything other than 3 to 1 or higher than 3 to 1, it's I think they'll say a big eye or something like that. So 3 to 1 is kind of very reasonable. So you could see this perfectly 3 to 1 delivered was 3 to 1 on this. So you could go back later on and check this yourself again. So like I said, this is what the breaker block model. You had the swing, come here, take out this low, an expansion, then a retracement back into this. This is what the breaker block model. In case of SM mitigation, the mitigation will not take out this low. The mitigation will just want to like do as you want to take out this low and then expand. then retrace into here. That is for the mitigation, model. So, but this is what the breaker block model, which is one of the most efficient reversal model entries or reversal trading strategies, the best ones out there, which I know and which I'm very much confident in or confident with. So, like I said, if you have a question, just type it out in the chat. I'll read through it. I believe everybody understood this model. Yeah, it formed on Thursday after 9:30. I told you the best time you should be looking for a setup, a trade idea on in the indices or the E-mini Nasdaq or the US under whichever one is after 9:30. After 9:30, then you should start looking for what trade setup. This particular one formed on five at the using the 5 minute time frame, not the 1 minute, not the 3 minutes, the 5 minute time frame chart. So that's why you need to always make sure you also have the ability also to be able to like check uh, the market. You're able to check be able to see through at various time frames or intervals, so you'll be able to know where the setup is going to form, because it's not as if it's fixed that it's going to form at 1 minute. It's not as if it's fixed or it's just fixed that it's going to form at 3 minutes. Sometimes it doesn't form at 1 minute, it forms at 3 minutes. Sometimes not even three, not even one, it forms at 2 minutes, sometimes 30 seconds, sometimes, but most of the time, 1 minute it's still, if you know what you're doing, 1 minute is it's still okay. Because if I go to this on the 1 minute time frame chart, let me see if I'll be able to spot it out. So look at this now. You could still be able to like spot something out of this using the 1 minute. So you can look at this. This is a sell side liquidity. We have this swing. It's But for me, I have the I'm able to like monitor all the time frames. I'm looking at as I'm looking at 1 minute. I'm also paying attention to the 5 minute. I'm also paying attention to the 15 minute. I'm also 7 minutes, the 15 minutes, 1 hour, 4 hours. I have to make sure I have my eyes glued to them. I'm paying attention so I don't miss out on anything, because I'll kind of like regret if I tend to like miss out on anything. So if you look at the 1 minute, you have this particular swing here. This outside equity was swept. Outside equity swept, and we have the 917. We have 930. This is 930 expansion higher, and what's going to even increase your confidence in want to go in going bullish is that we have clean highs here. You get We have clean highs here. We have this clean buy side equity here. We have clean. We have this clean highs here. We have clean highs here. We have clean highs here. So this expansion here to the 930, the 931, 930 expansion high, retracing into this level here. So that would have been my entry. Then stop loss would have just been here, because they swept out what sell side liquidity. They swept out sell side liquidity first. So if they are done with sweeping out sell side liquidity here, I feel like uh the next probable place or next probable areas they are likely to reach for, and which is very very clean, is to the buy side. Look at how clean. Look at how clean they are. Their buy side liquidity resting here, buy side liquidity resting here, which is very very what very very clean. So it's going to be what a clean target here. And if you actually don't know where, let's say you missed this entry here, and you missed this entry here as well too. We also have what we call the micro. We also have what we refer to as the micro. The micro is when price tend to when the algorithm tend to book price. Uh, when the algorithm tends to book price in a more efficient, when the algorithm is tend to is eager to want to reach for a particular level, or when the algorithm is tend to eager to take out sell side or buy side or liquidities, or to fill up inefficiencies. So within this time frame, within this um, little time windows, that's within the 9:50 to 10:10, that's the AM micros, which I'm making mention of. 9:50 to 10:10, we have the 10:50 to 11:10. We have 9:20 to 9:40. We have 9:50 to 9:10. We have 10:20 to 10:40. We have 10:50 to 11:10. You get So within these time windows, within these little time windows here, those little 20 minutes, I think 20 minutes or so, there is there's this high this high efficiency in price, this high um, um, pre, pre, probable move in price, whereby price is eager. It just aligns. Everything just aligns very well. At that particular point in time, you can be able to find and trust a particular framework uh, in line to that direction you want price to reach for. You get, let's say you did not get, let's say you're unable to enter at this particular point here, you're unable to enter at this particular point here or in this retracement here, and you waited for, let's say you wait for the 950 micro. So where did the 950 micro start from? The 950 micro started from what? First of all, you need to make sure you have your targets. Your targets are clean, and uh, your targets are clean, and they make sense, that it makes sense that price is going to reach for those levels. So these are what buy side liquidity, and so our sell side liquidity been rated. Yes, sell side liquidity has been rated. Get, so I feel they should have no business to coming down again, because they are done taking out what sell side liquidities. So the next areas are what is to the buy side liquidity. So if you were to use the micro window started from what 950. The 950, where did the 950 start from? This is where the 950 started from, this particular point here. So this if I should use this as 950, the 9 and relate it as 950 to what, the 1010, let's say 950 to what, let's say you use the micro instead. So this is where the micro started from, the 950 to what, 950 to 1010. So you see within the 950 to 1010, this is when the algorithm started from. You can see how they started bringing price there. This is the 950 candle, exactly as it came into this fair valuation gap here. We have this and this is the first fair value gap that formed after price was expanded, after price took out what, this sell side liquidity here. This is the what first what fair value gap that formed afterwards, after price to cut sell side liquidity, moving into what, into this particular direction. That's the buy side liquidity here. So you could have used this micro here, which is I think I'm wasting time on this. So which is this level here. So fair value gap, fair value gap. And if you pay attention to, for those in the Discord, my Discord channel, I have a lot of resources which I actually shared there, which is accessible to, if you're subscribed to the live stream, you'll be able to have access to some very important and useful content on that Discord channel there. I actually shared models or entry pattern ideas which I tend to use to trade. You get, I shared this particular one here. That's if you're using a pattern, if you're using pattern, what I mean by a pattern, if you're using pattern, let's say you're using pattern, let's say you want to you did not get, let's say I was trading and I did not have access to the 5 minutes time frame on 5 minutes view on the on e-mini Nasdaq. Let's say I did not have access to like be able to monitor this and monitor this at the same time, and I did not know what else to use. So there's what they call pattern trading. Pattern trading is when you're trading, when you're entering when you're entering a trade based on how the pattern looks, or when you don't have a particular clear setup present. You get, so if you look at this here from here to if for these whole levels here now, there's nothing as breaker block, there's nothing as mitigation block, there's nothing as that. It's just what fair value gap. It's just a simple fair value gap. So I could just call this what pattern trading. So whenever you're using the pattern trading, whenever you want to use pattern trading is where, let's say some let's say some scalpers, people that tend to scalp or scalp good or scalp whatever, or BTC or whatever. So that they just tell you, oh, this one is coming down. As it's coming down, they just want to just be buying, or as it's going up, they just want to just be as it's coming down, they just want to be selling, or as it's going higher, or they feel like it's going to, because they all feel like it's going higher because it looks like it. So they tend to just want to just enter. There was no clear setup present for them to want to take that particular trade. There's no particular clear setup. So whenever you want to use a pattern trading, you could save yourself the stress, or just save yourself the risks little by just trying to just do it inside the micro. So inside the micro, whenever you want to use pattern trading, I'm sharing this now for free. Whenever you want to use the pattern trading, that's pattern trading in the sense of like fair value gap. Make sure it is within what it is within the micro. It is within, let's say, between 950 to 1010 or 1050 to 1110. So it should be, let's say, fair value gap in line with that particular target. Let's say you have a target that is very sure you feel that price is going to reach for that level, but you could not find a setup to actually you could use to enter and get to that direction, or can't actually find where to actually enter and where to place stop loss or whatever. Wait for the micro and use what fair value gap that forms inside of that micro. And there are a lot of things that classifies or that make you be sure that a fair value gap is actually going to work, which I've already made mention of, already explained, is what is the midpoint of that gap. Is the midpoint of that gap. If you look at this, the 9:49 a.m. respecting what the midpoint of this gap, and the 9:50 respecting the midpoint of this particular gap, and then trading away from that what the midpoint of that gap. You can see trade away from the midpoint of the gap. You can see they were respecting what the midpoint of the gap. So whenever you see something like this, you just tend to what, buy. And this is inside the micro, and you have what buy side liquidity and buy side liquidity that has not been cleared out, that has not been reached for. So which is what a very good trade to take if you're using what the 1 minute. You get I already explained the setup using trade idea using the 15, the 5 minutes, and now I'm explaining if you only have the advantage of just, let's say you only just opportunity to just be able to view chart on just 1 minute. So which is something like this, which I just explained. You could be able to get an entry opportunity here. Let's say you got this. Let's say you're able to enter here, and since it's respecting this point here, it's always best to always use the first candle that forms for the fair value gap. Okay, it's always best to use the first gap, the first candle that makes up that fair value gap. So which is the low of it. So it's always best to always use this as your what the low of this level here, the low of this particular candle as your stop loss. So you have candle number one, candle number two, candle number three. The fair value gap formed inside what candle number one and candle number three. So your stop loss should best be placed here. But most times, sometimes you could as well just use as low as this level here, most cases. But it is always best, like take my words for it. It is always best to use the first the first one. Yeah, it's always best to use the first one, because there are times whereby price might be you might actually be find yourself in a high resistance liquidity run where price could keep dancing at the lower portion of this fair value gap and to come as low as this level here and then start retracing back. So it's always best to place your risks or manage your risks or set your risks at this low here and use it to run. Let's say we use here. Let's say we use this low here and targeting this as low as this as high as this level here. This buy side liquidity here. So we have this is a 2 to 1, a 2 to 1 on this position here, 2 to 1, 2 to 1 on this. This is actually a very very good trade. This is a 2 to 1 on this level here, or you could take partials off here, you take little partials off here, then take off the rest at this particular point here. So which is actually still good. If you are to use this one here, you'll be making more money, which is good and fine. But it's always best to use what the first candle of this. So this was for Thursday. Actually, I don't know about Friday. I'm not sure there was anything that formed on Friday. And they actually looked into it because it was just kind of like jagged and they kept pushing. They now start bringing price lower, which they're supposed to do, which they're supposed to do from the beginning of last week to get. So this was for Thursday. For those that actually didn't see this, this is for Thursday. So let me just move on to why we are here for today. Uh, let me see if anyone has a question. How to always identify a BB. I try just explain how to identify a BB. Different explanations, getting confused. Has there been any other explanation on how to identify a breaker block before? I said a breaker block. Uh, okay, let me just quickly go back. So let's explain this. Although I already have materials on that in the Discord channel already. Although the Discord channel is actually gated, it's gated, so it's more like a private channel. But okay, look at this now. This is what an example of a breaker block. It looks something like this, whereby you have, let's say you have a particular, let's say if you're bullish for a bullish breaker block, you should have something like a sell side liquidity, yeah, something like a particular low, an old low. This is an old low here, like something like this here. This is an old low here. So you want to see price for a bullish scenario. You want to see price come as something as this. Do something like this. This is what is swing high. This swing high, and what you want to see price come and what sweep out this particular low, sweeping out this particular low, and you want to see some form of what an expansion higher than this particular swing, this old swing here, expansion higher. Then you want to see what a retracement inside of this level here. So that retracement is what you use as a what your entry, and your stop loss should either be somewhere around here as well as this level here, or if it's a fair value gap, you use the first candle of that fair value gap. So either you use this breaker block, you highlight your rectangle this thing at this, you highlight it out, use as a what entry, and then what to those are here. So is this scenario here is what happened here. Is what happened here. I think this is kind of like again. So this particular scenario, which I just explained, is where you can find here, which I just shaded. They took out what that low, then they what expanded and what retraced back down into that breaker block. I said you could use this bullish candle here is what you highlight the rectangle at the particular low and high of that solid bullish candle there. That's what you'll be using as your breaker block. Inside of it, entry, and then what to your targets there. So which is something as this as well. So or you could come back to check it out, or you go to the most of the resources which I shared in the Discord uh, channel though. 'Cause there are a lot of beautiful contents in which I shared there, which are in the education channel in the Discord, and how to trade other flows, how to trade continuous. Because I was not really good at trading continuous trend. I was not really good at it, so I kind of like did a research on that and kind of like cause it, and I decided to share it there as well too. So you could just go there and just learn. You could just go there and keep learning. If you're someone that is very new, if you're someone that is not very good at technical analysis, technical science, or whatsoever, you could just go there and just take most of those materials, give yourself time, and just start working your way up. So moving to daily time frame charts, you have try want this to just be a 1 hour video, but let's see. So let me just remove this. So what I just explained is for what happened on Thursday. So for those that did not notice it, you could just go there and look at it again, familiarize yourself with it and how it works. So I made mention of this particular low. I mean, aside from the monthly volume imbalance here, monthly volume imbalance, which is what I shaded here, the monthly volume imbalance, we I just highlighted what this monthly November source side liquidity, February source side liquidity, and also this is March source side liquidity on the daily time frame chart. So moving to the 1 hourly time frame, you can see from beginning of the whole of last week, we've been bearish. They've been giving pushing price lower, pushing price lower from, let's say, from Wednesday of last week. You can see we had this swing, this um, high here. Then we have a what higher high. We have what an expansion. This high was unable to take out this particular high, and this particular high was swept out using this particular high here of Thursday 10 a.m. Let me go to as last 15 minutes so it makes it very clear. So look at this now. We have this particular high here was swept out here, and this is how to indicate that okay, we are in what, a bearish flow. The potential booking price, they're actually pushing price lower. So you can see this. We have this particular high, this candle here, Thursday 5th 4 a.m. candle. This particular high here was swept out with what the that same Thursday 10 a.m. candle was swept out what they took out of buy side liquidity. So there's a liquidity rate here. So liquidity rate, you indicate it with X, used at the center. So that's indicates what a liquidity, what a buy side liquidity rate. Believe everybody can see that. So that is what a buy side liquidity rate. And if you compare this to what, I wanted you guys to see this. If you compare this to the if you compare this to the ES, this is the, I want to put the ES by my right hand side. So if you compare this particular man here, this towards this reaction, this buy side liquidity. If you check it out on the ES, that's the S&P 500. The S&P 500, you see what where's Thursday 4 a.m., right? Thursday 4 a.m. Thursday 4 a.m. candle. This is it here. This is the Thursday 4 a.m. candle. This is it here. The Thursday 4 a.m. candle. Thursday 4 a.m. candle. And compare it with what related to what Thursday 10 a.m. candle on S&P 500. Can you notice the difference, right? You can see we have the 4 a.m. candle and the 10 a.m. candle on what on ES, on S&P 5, on ES. You have X. So you can see the difference. So what can we say? What can we say? This is what a cracking correlation. The E-mini Nasdaq was able to what, take out of that buy side liquidity and then start booking price lower, and but the S&P 500 was unable to what, take out what this sell side liquidity, that buy side liquidity, and they were unable to reach for this level higher. So this is indicating what, bearishness. This is indicating what, bearishness. This is how to use the SMT to what, to confirm that okay, price is now what, it is now bearish, or price is now what, bullish. This is what the smart money technique, the SMT. This is what the smart money technique to what, to indicate, because using this now, this is just price action reading. You don't need indicators to actually be able to what, to spot this out, but you can use indicators to spot this out. But once you understand this, you could just, if you don't want to do it manually, you could just use indicators to just what, spot it out for you. That's if you're on the 15 minutes view, you could just use indicators like this one here. SMT by I use this particular indicator here, SMT for. So if I remove, let's say if I remove this one here, so you can see they did not highlight it from year to year. They use year to year. I guess they which is the difference between year to year and year to year. It's still the same thing, but I tend to want to do it most cases. I tend to do it manually and use year to year. So which is you can see that big difference, right? They swept out buy side liquidity here, but they were unable to sweep out buy side liquidity at this particular point here. So which was indicating what bearishness, and which of these two is weaker? For the fact that this one was able to take out this buy side liquidity and this one was unable to stretch to take out what this buy side liquidity, it means that it is what it is weaker. It is weaker to in the sense of bullishness. The S&P 500 is weak. In the sense of bullishness, it is indicating this man here inability to what to go higher is indicating that what the S&P 500 is what is weaker. So in that case, if you tend to go short on what on on uh on S&P 500. S&P 500 is most likely to deliver very much to deliver very much than compared to what the Nasdaq. You get, because it is what it is weaker. Since it is weaker to what to tend to push higher, if it's weak to go higher, it has that means it's showing that it has the strength to want to come down. You get, so it's vice versa. So since it's showing that it is weaker to want to push higher, it also means that what it has a tenderness or eagerness to what push price low down. It is eager to want to start coming down compared to the Nasdaq, because the Nasdaq still actually gets strength to once they take out buy side liquidity. So this one was unable to take it. So it means that what this is what it's lower. So we have look at this now. We have what at the after the SMT divergence, we have this and we have this. So if you look at this fair value gap inside of between 10 a.m. to what to 10:30 a.m. If you look at the fair value gap between 10 a.m. to what 10:30 and the 10:30 a.m. I've already explained this model to you guys. This is one of my models which I tend to trade with, which I already shared the video with already. I told you guys the first presented fair value gap that forms on the 15-minute time frame chart. It is on the Discord. You could go and check it. I did a video with this, which I actually told you guys. I actually have it noted down on my uh board here. You get, I trade this very very well. I've backtested this and it works every single time. So you actually, in case you don't actually, there are so many things you can actually use to actually be able to get a trade of frame up get a trade idea using this. You could use this as well. So I told you guys the 15 minutes uh the 15 minutes first presented fair value gap. That's the first fair value gap that forms after 9:30 on the 15-minute time frame chart. Serves as a what as a potential what bounce. Like that particular fair value gap they deliver most of the time. Most of the time that fair value gap they highly efficient. You can look at this. This is the gap here which is shaded here, and if you look at the S&P, the Nasdaq. If you look at the Nasdaq, this is also the gap as well to this particular gap here. Let me just see. So so let's try sharing this. So look at this one. Look at the difference between this gap here. So you can see, and this gap here. This indicator is actually showing the first presented fair value gap using what? Because I'm using the first presented fair value gap indicator. This particular indicator helps you spot out what that if you want to do it automatically, if you don't want to actually start doing it manually. So you might be busy with some other things. You want some things to just uh, if once it just spot on, it just highlight it out for you. You get, or most of the times it's best you just do it yourself manually and just highlight it. So you have this, because most of the times the indicator tends to delay. You get, so you make sure you have a lot of things you actually have as your arsenals So you use most of the time. So if you're not using this particular model, you have this one you're using, you have this one you're using, you have this one you're using. So you don't tend to just enter trade blindly. So you have list of things you should tend to always look out for and use after the 9:30, which I've already like shared most of I have shared most of these things in the Discord channel there. So you could just go there and just check them and just start mastering them yourself, back test it yourself and see that it works every single most of the time. Again, most of the time, 80% of the time it delivers. 80% of the time it delivers. So you can look at this now. We have the 15 minutes the 15 minutes first mental fair value gap on the ES. You will see weaker hand and showing this weaker hand to go higher. It's showing it also means what a stronger hand that it is eager to want to come down. So you use what this fair value gap as your as your entry, using the fair value gap as your what as your entry, using the fair value gap as your entry, using fair value gap as your entry as a bearish listen, bearish entry. You want to see the what, like I said, you want to see the midpoints respected. Very, very important. You want to see the midpoint respected. So you could use it as high as this, or you could use this one as well too. You could use this particular low, but in most cases, it is safer to use the first what. Let me move this indicator. Okay, let me just wait on. It is always safer to use what the first candle formation of that fair value gap to use as a stop loss. Depending on how skilled you are, but it is always safer to use this. So let me use this. So using the midpoint as what as an entry, the midpoint of that fair value gap as what as an entry for what the setup for the short trade idea. We could just target as low as what could have been targets. Uh, if you pay attention to the ES, you see we have what source liquidities. Let me remove this. But it's not just by having setups and entries. You should also know when to also what look for what exits. It's also be also to pay attention or take note of where to what be looking for where to exit or be taking profit out of that trade, or where you should be what taking profit out of that trade. So you can see if you had used this and just aim for this particular low here, or just aim for what a 2 to 1, you should always aim for what 2 to 1, 3 to 1. You can see we have what this outside liquidity resting here, sell side liquidity resting here. Got pricing to move from what buy side to sell side and sell side to what buy side. You could see price did not what take out this particular low here. Price did not what take out this particular low here, but on the Nasdaq, let's pay attention to the Nasdaq. Let's on the Nasdaq page. So Nasdaq, the same thing as well too. Again, they didn't take out that particular low here, but this is the low here, which is this on Nasdaq. Hope everyone can okay. This is the low I'm referring to. This particular low here. That's 4th of March, 1:15 a.m. That's particular low, 4th of March, 1:15 a.m. You can check that on your chart. So that's the low I highlighted on the Nasdaq chart, which is by this hand side. And this is the E-mini S&P 500. You can see the difference now. The push price lower for those that actually didn't take profits, and let's say for those that actually didn't take profits here and you did not move your stop loss too early, and that's if you can see through this, because this actually took time to play out. This actually took time because it actually went into Friday as well before it actually like fully delivered. So you can see that same first printed fair value gap, that 15-minute first printed fair value gap acted as a resistance to push price down to that target on the E-mini Nasdaq. And you can see what the E-mini Nasdaq delivered very clean. It took out what this outside liquidity. Why was the Nasdaq was unable to what take out what was unable to take out what the sell side liquidity, this sell side liquidity of that what 4th of March, 1:15 a.m. Why? I already explained earlier before. I said this man is what, in this case now, in this case of SMT, this SMT formation here, this is eager to want to, it took out what buy side liquidity. S&P 500 was unable to take out what that buy side liquidity. So it means that what, in the sense of bearishness, indices is what is weak. In the sense of bearishness, we in this particular scenario, S&P 500 is what is stronger to want to come down. Again, so this is me now explaining what how to use what and how to understand the SMT divergence or cracking correlation. Get, so this is me explaining this, but these are things I do. I kind of like explain this even in during the live session, because while looking for, I also do explain most of these things. Actually, don't want to. Actually, don't intend to explain much, but I'm just trying to just show you guys this, so you can see how the SMT, the S&P 500 was able to deliver into this particular low, and what you could see that strength took out what this old low and took out this and what, see the strength which it used to what to dig through what that particular low and what, and it swept it out. Why the Nasdaq was unable to what to take out what that particular low on Nasdaq, because of what we have what cracking correlation, the cracking correlation which is a graphic correlation which is the SMT divergence, and which tend to what, so this SMT tends to what help you know which particular pair to trade um, between the SM and the Nasdaq and the S&P 500. It tends to know which one you should choose. So let's say you want to either, let's say you want to go long or you want to go short. It tends to help you to know which one to just to trade on. Yes, so if you're using the SMT, you tend to know which one is weaker, which one is stronger, which one is most likely to just go straight to the point for you. But why most people tend to use trade Nasdaq is the Nasdaq tends to just stretch very well. It tends to deliver. It tends to move smooth. It tends to move smooth compared to the S&P 500. It tends to move smooth. But using this idea now and this 15 minutes first predicted fair value gap, which I've already been explaining, I've been teaching this already. It's a very good model which I kind of like discovered, and I tend to like use it most of the time. Yes, this 15 minutes, the 15 minutes first predicted fair value gap, which is what I kind of discovered and I've been using most of the time. You can see how I kind of like delivered into this level here and then trade down. So if you are still that position still on, you'd have been able to get as low as what, let's say 3 to 1, but you don't it's most cases not actually by the risk reward ratio. Just know where to place your stop loss and when to exit the price and where to exit price. You don't need to start even that's you don't need to make it the most that it has to be exactly 3 to 1 or 2 point something or whatsoever. Just know when to enter, know when to exit, know when to place a stop loss, and that's what you just need most of the time. So you look at this now, you can see, so removing that, you can see the 15 minutes first minute fair value gap, which I showed you guys. If you look at it on the Nasdaq, we have this. So you can see the Nasdaq kind of like colored outside the line of that fair on E-mini Nasdaq, while why the S&P 500 was unable to do so. So moving forward into this week, what I'll be looking forward to is how they are going to what take out what how they are going to use or take out what the sell side liquidity of those daily lows or monthly lows. So I hope everybody got this. If there's any question, you can just type it out. So I'll just address this later on. So if I move further, so I hope this was clear and everybody kind of like got this. So from Wednesday last week, we could see it has been a bearish order flow where price has been what bearish or through. So you can see this level here being respected, the 15 minutes fair value gap being respected, and they are booking what price lower. So moving into this week, I'll still be bearish. I'll still be bearish until price like proves otherwise. Because it's not about being correct or perfectly correct with your bias or opinion. It's just you making sure you make money at the end of the day, or you manage risks, or you properly trade for that particular day. Looking at this now, we still have this this red shaded area here, this red line here that has not been cleared out on S&P, on the E-mini Nasdaq, that has not been cleared out yet, which is still yet to. So that is the level I'll be paying attention to moving forward. That's once the new week candle opens. So I want to see how they're going to use this sell side liquidity, this sell side liquidity here that has not been cleared out, but it has been cleared out on the S&P 500, but still yet to do so on the E-mini Nasdaq. So if they're going to expand through it, I feel like uh, I would love a gap opening. I'm not really skilled at predicting where the weekly candle would form, but looking at paying attention to this, and since I have eyes on this lows here, which is the monthly this is February 2nd low, and November's low as well too. So since I have eyes on this level here, so what I would like to see is I would like to see an expansion or a weekly a weekly candle opening crossing this straight line here, but it could still cross above here. It could still open around here. Then use it as a resistance level, or as a level of resistance to try to push price lower. But what I'll be paying attention to, especially this low, this particular low on the E-mini Nasdaq. I believe. So what I'm paying attention to on the E-mini Nasdaq is this particular candles below here. So I want to see how they are going to trade off this level here, and I don't want to see a rebound, a reversal pattern from here. I want to see them crossing this line here, and then start aiming for what's this level here. I want to see a strength in. I want to see a show of strength when they want to cross this level here, and then aim for this. I want to see them aim for this particular level here. So this is going to be my bias moving on to into this week. That's the next few minutes where price tends to open. So that's going to be my bias moving forward for the week. And for the so initially I want to be paying attention to how they use this red line, this also liquidity, and hope they don't rebound or they don't form a reversal pattern of that level. So that's what I'll be paying attention to. If they tend to create a continuous order flow from that level there, which is still fine, or if they want to or if you want to start doing it for a form of a reversal pattern from there, which is still fine as well. Too, but I'll be paying attention. That'll be my point of interest, which is going to be my POI. So moving forward. But what I'm paying attention to is, or what was going to be my target moving into the week is this black lines there, which I kind of like target. I want to see price reach for those level this week. Uh, and also, if you pay attention to the S&P 500, we also have this green shaded area here, which is what the daily volume imbalance here, which has not been filled. We also have this previous daily low. Why is this person not staying on place? So we have this low here, and we also have this green shaded area here, which is the daily volume imbalance. So let me show you guys how I got this. If you look at the daily time frame chart on the E-mini Nasdaq on the S&P 500, you see this the daily volume imbalance, which has not been traded into and has not been fixed. So I want to see moving into this week. I want to see how they're going to what trade into what. I want to see how they're going to trade into that daily volume imbalance, which is a green shaded area, which I shaded out. So that is going to be my draw on liquidity moving into the week. So the market is going to open in the next 2 hours, which I guess. So which is another reason which I see kind of like uh which kind of like confirm my bias, which is bearishness. They might expand or they might open price higher, which is still good. But I want whatever let's assume the open price, the weekly opening gap tend to what open higher. I want to watch because since my bias or my draw is not bullish, I want to watch or see how they're going to reverse that, use as a resistance to want to take out or reach for this level here. And these are going to be my drawn liquidity and also my point of interest. Either they reach for that level, use it as a drawn liquidity, or they use it as a level to form a reversal pattern. But which this is what I'll be paying attention to, the daily volume imbalance and also the low of that particular candle, which is this particular low here, this this low here. You get so if they trade into depending on how they trade into the daily volume imbalance, and they might want to what reach for this particular low here. So I'll be paying attention to see what price is going to do moving into the week. So this class is supposed to be an hour session. So I don't know. I promised I was going to take 1 hour of you guys' time. So I thought it was going to be a brief one. I thought it was going to be a brief one. So I feel the actually not be an opportunity for me to actually look into BTC or gold. I actually don't actually trade those markets. So I actually don't trade those markets. So since I've actually already spent most of the time on this, so I feel I'll just more like end it here. So the rest is going to continue in the live session moving into tomorrow. So make sure to use the link which I actually shared which in the group chat, I guess, to be able to join the live stream. So you could use the promo code which is Capo of Trade, Capo that's CAPO to for the promo code then to join as well. So to be able to be part of the live stream, that's where I'll be trading and trading live. So I think that'll be all for today. So I don't think to delay this session longer. So I hope you guys learned 18 or two and have some things to note down. So let's see what price we're going to give to us this week. So I wish you best of luck. So see you guys tomorrow, same time, not same time, please. The near session time. So take care, please. All right. All right. Okay.